Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Tuesday, May 28th, 5:35 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. Market state, we're in an uptrend since May 6th. The trend gauge over here, we've got the coveted green arrow on market leaders. Also, on the five major indexes for the three time frames that we track, but at the yellow sub arrow on short term, as the Dow has made multiple closes below the 21 and the mid cap index closed below the 21 again today. Medium term, Dow also pierced that level. The other four still above. Long term, all five of the major indexes above the 200-day moving average. So few things to be concerned about, but leaders continue to act really well. So what happened today? After the 3-day weekend, we had a gap higher in the morning and put in the high within the first 5 minutes and started to fade. We always note the opening 30-minute and 60-minute ranges, because when those are broken one way or the other, that tells you that at least for the very short term, for the intraday, who's in charge, bulls or bears. And that upside, that open was never pierced. We failed to the downside in the afternoon after a weak bond auction. That stocks pulled back on that, interest rates popped, but we had a strong close to minimize the damage. Here are the final numbers. Our 21 over 21 list, and we'll review the new list for this week in a minute. 14 up, 7 down, up on average of 0.97%. The big eight, led by NVIDIA, up 7.1%, up percent. Would be closer to about a 2.2% gain if it wasn't for NVIDIA. So a little bit of a skewing there by one strong stock. The RG8, this is our 8 growth ETF composite, not a good day. Down 0.42%. S&P just barely positive, but the equal weighted, this is a sign of breadth, and it's bad breadth, down 0.7%. Same situation on the NASDAQ 100. Market cap weighted up 0.4. Equal weighted down almost 0.8. Dow continues to flounder, down 0.55%. Mid caps down 0.65. Russell 2000 small caps gapped up 0.8. Not the best day after that, however, ending up down 0.14%. Same as global diversified 60/40 stock and bond, down 0.13%. Our flagship portfolio, GROTECTION, led by NVIDIA, up 0.24% on the day. Let's get into some charts. Then the tail of the tape, will start off with the S&P 500 here. So we've still got this big handle, big bar from last Thursday that's controlling things. Let's go to the 15-minute chart. That was the day that we had the failed breakout at the gap open after NVIDIA's strong earnings report. And we put in a breakdown of the bottom of this level that we had been trading at, which was around 52.80-ish. But the next morning, this being Friday, we gapped higher. So we went from a failed breakout to a failed breakdown. We tested that failed breakdown this afternoon as well when interest rates popped, but you can see the strong close. So this 52.80, pretty key area right here. On the downside, on the upside, 53.25. So we've got less than a 1% range that we're looking for a break either one way or the other. And frankly, again, you could get both with it being as tight as it is. And remember, from failed moves come fast moves in the opposite direction, an old Wall Street saying. So we'll be paying close attention to this level. NASDAQ 100 certainly stronger. You can tell if you go to the 15-minute chart on this that we never broke the lows from all the way back on May 17th. Set a higher low here on that big shakeout day, and we're near the top of that range. And again, this is really due to the strength of NVIDIA. New high close for the NASDAQ 100, superior relative strength over the last 5 weeks, just the opposite of what's going on with the Dow Jones Industrial Average. You can see the serious weakness there and breaking. So three closes below the now declining 21-day moving average. First close barely below, but still below the 50-day moving average. Mid cap, S&P 400 mid cap index, not the best day today. Breaking. So one below, one above, now one back below again, playing ping pong back and forth between the 21-day moving average and the 50-day moving average. Again, relative strength terrible here. And again, that plays into how bad the breadth of the market is. We're very aware of it and keeping an eye on our stops, but leaders not really affected at this point yet. Russell 2000 undercut but held the 21-day moving average today. So a positive there. On to the VIX. VIX was up today after piercing the 12 level a couple times last week, closing just below 13. The US dollar weak for most of the day, but bounced and ended at the top of its range, bouncing at the 200-day moving average. Precious metals, gold up 1%, reclaiming the 21-day moving average. Gold stocks up 2.4%. Second close back above the 21 and reclaiming the handle high, this big cup and handle breakout. Silver, high-ho silver up 5.4%. Bitcoin taking a break today, down 1.22%, still above the uptrending 21-day moving average. On to bonds. Bond prices down, meaning yields up. You can see we're in a downtrend here, drawing this channel line on bond prices. That's just means we'll see just the opposite of an uptrending channel for bond yields. But the broad bond index down 0.5%. The long bond TLT down 1.4%. The 30-year bond up 1.82%, and a break of this downtrend line got us to buy TBT today. TBT and TMV are the 2 times and 3 times the yield of the 10-year. I'm showing the 30-year, but here's the 10-year. It's the same downtrend line break there, and move back above the 21-day moving average. So we've got a good level to trade against, and this is going to kind of act as a pseudo hedge. It's not that it does have a negative beta, not as strong as an inverse index ETF. But if interest rates continue to go higher, this will cushion some of the potential downside in the stocks that we own. Sometimes they move in sync. In fact, they did later in the afternoon today. Yields continued to tick up a bit as the market was ticking up into the close. So they're not always in lockstep, which is why the beta is negative, but not strongly negative. So that's interest rates. That's all of our inter-asset correlation. Let's hit the tail of the tape here. 10 a.m. consumer confidence above average. That's good. Wasn't much of a pop out of it, though. And then yields spiked after that bond auction. We're in an 8-day consolidation. Second day above the 8-day exponential moving average with an undercut and reclaim today. 17th day above the 21-day moving average. As far as sectors go on the strength, we're gold, and silver stocks, oils, and semiconductors. To the downside, the dollar, Bitcoin, financials, industrials, healthcare, and software. 2 small changes to the portfolio, trimming PDD. This was the buy from last week. Just trimmed it a little bit on weakness and bought that TBT as an interest rate play. So this ticked down our adjusted beta a bit from 1.37 to 1.29. Bottom line on the day, gap up fades, strong close minimizes damage, and NVIDIA with a very nice day 3 higher high. And let's kick it off the chart section with this. So this is the king right now. You see the gap up on earnings. You see a day 2 higher high and now a day 3 higher high. Above average volume on day 3, kind of rare. compared to day two when things continue higher. Typically, volume goes lower after an earnings report. This big volume here, noteworthy, and this is really carrying semiconductors and also anything having to do with AI data center holding up, making higher highs or holding up extremely well. Let's go to the 21 over 21 now. And first of all, what got kicked out last week? ERX, this is our oil plane, very obvious why it got kicked out. Oils were up today, however. American Express, due to weak relative strength, got kicked out despite holding on to the 21-day moving average. And Carrier, we sold that. Didn't break the 21, but relative weakness as well on Carrier. So those were the three that were booted out. Let's go to, we'll look at these in, we already showed NVIDIA. This is inverse order of strength today. NVIDIA, a reminder, if it's green flagged over here, we own it in our portfolios. And here they are. FCX, after testing the 21 last week, strong day, back above it today. PBT, this is the interest rate play. When I ended my review over the weekend, I had 20 for the 21 over 21 and about 20 candidates for that one open slot. So I left it open going into today and let the market tell me which one to add to it. And in this case, it's a contrarian play that I really want to keep an eye on because higher rates will, as I mentioned before, probably serve as a headwind to stock. So that's one of the new ones on the week. Micron continues to make higher highs. Your storage as well, we own that. GDX bouncing after undercutting the 21 for one day last week. CCJ uranium play continues to be strong. TMDX continues to ride the 8-day higher. Abercrombie and Fitch also on a frozen rope higher. AppLovin tested the 21 last week. Up today. First Solar continues to just crush it. Spotify, since we bought this last week, added to the official 21 over 21 for this week. Almet continues to be strong. CEG, we own this, bouncing at the 8-day. Goldman, kind of pulling back here after a strong run. Keeping an eye on this because it's a gauge for the overall financials, which were extremely weak last week. Kava reported earnings, closed at 82.40, popped as high as 86, fell as low as 75, right now trading around 80.50. We'll be looking to possibly add to that tomorrow. So well received there. They did beat on earnings. BRT, inside day today, IBIT. This was added to the 21 over 21. I don't think it was in last week, but we do own it and it is above, so we put it in. CrowdStrike, negative reversal today after an upgrade, but holding the 8-day exponential moving average. Zscaler got a downgrade today. You want to talk about the penthouse and the outhouse there. Zscaler versus CrowdStrike. Nutanix. Nutanix, hello, consolidating for 5 days. PDD, negative reversal. SE, which is another Asian internet retailer, had some, the government investigate or something. I think this is down in sympathy with that, but still not a good reaction. That's why we trimmed the ad from last Friday. And that is it. That's our 21 over 21 list. As always, like to hear from you. The email is don@revereasset.com. The phone is 855 Real Wealth. That's 855-732-5932 if you're interested in becoming a client. My partner, Dan Stewart, can be reached at dan@revereasset.com. Our flagship portfolio is named GROTECTION. It serves a dual mandate. That is to grow assets during uptrends and protect them during downtrends. Now, the downtrends can be over several time frames. Sometimes it's short term, sometimes it's medium term, sometimes it's long term. Long term being when it breaks the 200-day moving average. That's when all market risk picks up. All bear markets have occurred historically below the 200-day moving average. So we don't always blow everything out as long as we're above the 200-day moving average. We normally keep a broad S&P exposure or other index exposure if that's acting well. It might be the Dow, for instance, if we're pulling back. But that's what we do. And if you're interested in this approach, reach out to us. And with that, I'm going to wrap it for Tuesday, May 28th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening. Have a great day.